Good morning, welcome to IG's Early Morning Call and welcome back from an extended weekend for the May Day bank holiday. It's Tuesday, 2nd of May. Let's take a look at the headlines as we wait the start of today's European session, where we are expecting some gains at the beginning of today's trade. We've seen some gains as well in the Australian dollar today after the Reserve Bank of Australia raised rates by 25 basis points and said more to come. Later this week, we've got the Fed and the ECB. Are they likely to be equally hawkish? HSBC earnings out today, up with a substantial upside tick. It's reinstated its dividend as well. The stock was up almost 3% in Hong Kong. And US earnings out today before the bell. Pfizer, Uber, after the bell tonight, Ford and AMD. Take a look at volatility. We're up for a second day. Yesterday was this spike lower, almost the low point we had back on the 2nd of February at 18.9. We're currently trading just a couple of ticks away from the 20 level. With that slight rise in the market today. Despite that, we do have some positivity on the session today. Bearing in mind, these are 24-hour markets. The London markets, as we all know, were out yesterday because of the May Day bank holiday. But there was a 24-hour market. In fact, we saw a punch higher, then a pullback to end flat. But in fact, what we're doing at the moment is we're building on Friday's close. So we've got a positive start well into the markets on from that close we saw at the back end of April. So looking for a slightly stronger start here in the London markets. And it's the same story across Europe. Yesterday, on the 24-hour markets, we saw a spike higher to levels intraday not seen since the 11th of January this year. 11th of January 2022, I beg your pardon, 14, 15-month highs. Currently trading at 15,933. We are expecting a slightly stronger start on the German and indeed French sessions as well. You can see again that move in the markets yesterday. We got a gain on the session at 74.83 in France. If anything, the French market's a little less positive than Germany and certainly London, where we're seeing some gains expected at the start of the trading day at the top of the hour. Let's take a look at what's been happening overnight in the Asia Pacific markets. I want to bring up a chart of what's been happening in some of these markets. We're down on the Japanese Nikkei 225, 29,110. This is coming after yesterday's move up in the markets, and you can see that spike high has taken us beyond the highs. We were back on the 17th of August 2022, and in fact in yesterday's session we were intraday at highs not seen since January 2022. Overnight, the International Monetary Fund has raised Asia's economic forecast. According to the fund, Asia and Pacific generally will be the most dynamic of the world's major regions in 2023, predominantly driven, it says, by the buoyant outlook for China and India. As in the rest of the world, domestic demand is expected to remain at the highest growth, the biggest growth driver across Asia in 2023. The International Monetary Fund says it expects Asia's economy to expand 4.6% this year as a region, after a 3.8% increase in 2022, contributing to around about 70% of overall global growth around the world. China and India will be key drivers with an expansion of 5.2% and 5.9% respectively. But the IMF warns of risks to the outlook, stickier than expected inflation, slowing global growth, impact of US and European banking sector stress. The fund forecasts next year's Asian growth at 4.4%, down 0.2 percentage points on the period from last year compared to its previous estimate. I want to show you what else is happening in some of the other markets around the world. The Hang Seng Stock Index, as you can see here, is fair wide volatility on the session in today's trade. We're currently trading at 19,930. We've seen Hong Kong GDP out today, where we've seen a fairly strong reading for the Hong Kong markets. Let me just quickly update you as well on what's been happening in Australia. And I want to refer this back again when we talk about what's been happening in Australian interest rates today, because the Australian ASX 200 down 1%. Now, Wall Street close as of the end of yesterday's session, beg your pardon, this is Friday's session. Dow Industrials down, S&P 500 little changed, Nasdaq Composite down on the trading day. The US Treasury Secretary Janet Yellen has warned that the US may run out of cash by the 1st of June if Congress fails to raise or suspend the debt ceiling. Biden has called a meeting of congressional and leaders on the issue, and they will be debating this on the 9th of May. The BBC says the debt ceiling has been raised, extended or revised 78 times since 1960. Let me just take a look as well at one other chart where we are watching what's been happening with JP Morgan Chase, because that was in the news yesterday. JP Morgan Chase trades all sessions on the IG platform. I should say, of course, there was, of course, trading on the cash trading day yesterday. This was the move that we saw for JP Morgan Chase. It was up 2.4% when all was said and done yesterday after the acquisition over the weekend of the most of the assets of First Republic Bank for $10.6 billion. There have been some speculation on Twitter amongst some of the banking analysts that I followed, suggesting that JP Morgan might actually be barred from buying any further assets of First Republic because it already has more than 10% of consumer deposits. And JP Morgan, of course, is mostly an international investment bank. But that sheer size of the operation, according to some, meant that it wouldn't be able to take on any more of First Republic. But in fact, what happened was they were the ones with the best bid, and they came through with the answers, and they were given the opportunity to take up Republic Bank for $10.6 billion. So far as early trade is concerned on the US markets, this is where things are today. We've got a rise at 13,238, slightly up from yesterday's slightly lower close on the Nasdaq, for example, there. Now, Australian rates have been raised again by a further 25 basis points. Also warned that more hikes are to come. The RBA board raised its cash rate 25 basis points to 3.85% at its monthly meeting today, defying investors who'd bet the central bank would extend a pause for a second month. I think one of the big things that really did stir some interest in this Australian dollar market was the fact that the central bank says it's not done. Big gains, you can see. This is the Australian dollar against the US dollar today, up over the 67-cent level, the highest we've seen there in a couple of weeks. And in fact, whichever one you go to, you've seen some really big gains for the Aussie dollar today. If you're long on any of these crosses, you'll be in the money today. This is against the Kiwi, and I challenge you to find an area where the Australian dollar's not up. Look at that, 3 really strong days. Culminating today's move for the Australian dollar against the Japanese yen, and possibly significantly as well, looking as though it could well close beyond the 200-day moving average. It's the first time that's happened since November last year. And we've got against the euro up, we've got against the Canadian dollar up, we've got against sterling up. Aussie is up across the board so far as its performance there is concerned. 2 big interest rate decisions still to come this week after that hawkish RBA on its 25 basis point move. And it could well all culminate in a better idea as to where the Western markets are in terms of the interest rate outlook. Tomorrow, Wednesday, the 3rd of May, the federal funds rate is expected to rise by 25 basis points to a target range between 5 and 5.25%. Economic data is now or reflecting the effects of the speed at which have been raising interest rates in the States. However, while GDP is slowing, with the potential this year that the US economy could go into recession, according to some, inflation is still far from under control. Meanwhile, on Thursday, it's the turn of the European Central Bank to deliver its latest rate decision. The majority of economists expect the ECB main refi rate to rise by 25 basis points to 3.75%. Deposit facility rate also forecast to rise by the same sort of percentage point increase to 3.25%, and the marginal lending rate as well to 4%. At the back end of last week, there was some pleasant news around GDP in both Spain and Italy, while Germany and France remain close to flat GDP quarter on quarter, and like in other regions worldwide, inflation remains stubbornly high. I want to take a look at the way to trade these risk events, and that is almost certainly going to be the euro dollar. Certainly, this is the area of the markets to watch when we see the Fed announce interest rates at 7 p.m. Wednesday evening, currently trading at 109.86. We have been as high as levels not seen all the way back since the 31st of March last year. If you look at where we are on the high point we saw back on the yesterday's session, Wednesday, 26th of April, we were as high as 110.95, currently trading at 109.86. Euro dollar trade could well be the area of interest to watch when the Fed and the ECB moves interest rates this week. Let's take a look at what else has been happening across the world. Let's just quickly dial in what's been going on with sterling. There's a couple of interesting points I think worth mentioning when looking at what's happening in sterling. It's not much moved in today's trade. Nationwide house prices, April month-on-month increase, 0.5%. The market had expected a fall, 0.4% fall. Year on year, we're down 2.7%. Meanwhile, the British Retail Consortium says food prices at British supermarkets rose 15.7% in the year to April, the biggest annual increase in records going back to 2005. Lower prices are on the horizon. And whilst considering this, where we are in terms of sterling, where we've seen this sort of sustaining recent highs, the Institute of Directors Business Confidence Index in the UK out today, up for a fifth month in a row, according to a lobby group from the IOD. It surveys companies, directors and issues such as the wider economy and its own plans for hiring and investment. It rose to a -5 in April. The significance of that is, I think, is the fact that you've got to go way back to the point at which it was at when the Russian invasion of Ukraine started. So that's another positive aspect for the UK, and perhaps possibly maybe another reason to look at potential further upside for sterling against the US dollar, especially if the Fed is dovish this week. A lot of ifs and buts in that, but I think it's worth considering all possibilities with the potential for continuation of this recent rise in the price of the pound. Take a look at what else has been happening. Got some German data out this morning. Retail sales falling by 2.4% in March compared to February. Economists anticipated a 0.4% rise. That drop is more than expected. That's for German retail sales. And later on today, we got Eurozone consumer prices expected to rise by 6.8% in April year on year after a 6.9% rise in the previous month. And you can see now why, when looking at that, is that they were expecting further interest rate rises, possibly from the European Central Bank later on this year, despite the fact we got some economies close to going into recession, or certainly close to going to contraction, I should say, after that data out last week just showed the French and German economies expanding by 0.2%. Yes, there were better numbers coming through from Spain and Italy, but nonetheless, broadly speaking, there is that threat if the Eurozone sees interest rates continue to rise. And when you see inflation data like that, there's no real expectation necessarily of a slowdown. US macroeconomic indicators due today, job openings, factory orders and API crude oil inventories. Let's take a look at some of the corporate news headlines out this morning. Got some good numbers coming through from HSBC. The stock up 2.6% in Hong Kong. Pre-tax profit, $12.9 billion for the first quarter, up 212%. Yep, 212% year on year. Much higher than the 8.64 billion average estimate of 17 analysts compiled by the bank. And as I said, it was resulting in a positive shift. The headline profit was boosted by a reversal of the $2 billion impairment it took against the planned sale of its French business, as the deal may now no longer go ahead, according to statements. HSBC announcing a dividend of 10 cents per share, its first quarterly dividend since 2019. If you take where we closed out Friday's session at 573 and you look at what's happened earlier on today in the Hong Kong market, just to show you very quickly what happened to the HSBC in Hong Kong. That trades under the ticker symbol 5. Let me see if I can dial that in for you. The Hang Seng Stock Index, beg your pardon, let me just go HSBC. There we go. That was the deal we saw today, taking us up there to levels not seen since the 9th of March this year. That was now a 3% rise on the Hang Seng Stock Index, so potentially seeing something like that up on the London markets. Oil sector, BP, posting a profit attributable to shareholders of 8.22 billion. Let me just quickly take a look at what's happening with BP shares. As of Friday's close, we saw a gain on the session at BP because of what had originally been some good numbers out from Chevron and Exxon. Exxon, I know, ended down 2%, I think, on Friday, but this stock posting profits this morning, and it's reduced its net debt by about $6 billion to $21 billion. Underlying replacement cost profit for the quarter was $5 billion compared with $4.8 billion in the previous quarter. That is the standard they measure themselves by. The reported profit for the quarter was $8.2 billion. The reported result for the first quarter is adjusted for inventory holdings. There's a lot of complications going on in this, but broadly speaking, I think analysts seem to be quite impressed with what BP has done. The big question is whether or not this upside we saw on Friday is pricing all that in. Let me just stay on the charts and bring up something else which might concern investors in Superdry. The retailer's confirmed that it's in positive discussions with regards to a proposed equity fundraising of up to 20% of the company's issued share capital. This could well see a dilution of those holding the shares. Julian Dunkerton, the company's founder and chief executive, intends to significantly participate in the equity raise, according to that statement. Now, the US pharmaceutical giant Pfizer is due to report its fiscal first quarter numbers before the market opens today. Analysts anticipating earnings of 97 cents a share on revenues of $16.65 billion. The same quarter a year ago, Pfizer posted earnings per share of $1.62 and revenues of $25.66 billion. As I said, this is one of those stocks that trades all sessions on the IG platform, and you can trade this when it produces the numbers before the bell. In terms of its competitors, Pfizer's top and bottom line will reflect a drop in COVID-related sales. In the case of Pfizer, the combined revenue from its COVID vaccine and antiviral pill is expected to $21.5 billion this year, compared to the $57.6 billion recorded in 2022. We've seen recent lows scored for the stock, not too far away from levels there not seen since July 2021. This set of earnings for Pfizer will be the first since the acquisition of Seagen, the oncology company acquired in a $43 billion deal. It's forecast to generate revenues of about $2.2 billion this year for Pfizer. Pfizer estimates this could rise to up to $10 billion by 2030. One of the stocks to watch at the start of today's trade in the States, all sessions on the IG platform. One of the other stocks to watch before the bell is Uber Technologies, expected to post a considerably narrower loss of 8 cents per share, according to analysts for the first quarter. The same quarter a year ago, Uber recorded a loss per share of a whopping $3.04. Revenue forecast up by some 26% to $8.7 billion. Look, bottom line is it still can't make a profit. Uber has been under all sorts of pressures for a number of different reasons, not least of which here in London and other cities around the world, they're pushing for union membership and making sure people are given full employment status. That wasn't how the Uber technology was meant to work. You can see the blue dotted line up here is the IPO price, and for much of the trade since November 2021, we've been below that. And the stock will open this morning, all sessions on the IG platform, at $32.74. Tonight, after the closing bell, Ford's expected to post earnings for the first quarter. Analysts there looking for 40 cents a share after a loss of 78 cents a year ago on revenues of $39.25 billion, up 13% year on year. It will be the fourth straight quarter of sales growth for the US car maker, driven by its North American market. The market will have a close look at the group's electric vehicle division after it cut prices in January, after Tesla did the same thing. Margins are likely to be affected. Tesla posted its lowest gross margins in 2 years. Can Ford beat that? Well, you can see Ford recently on the chart here has been not too far away from this line of support at $10.90. It'll open all sessions on the IG platform 9 o'clock this morning UK time at 12:08. Also after the bell, Advanced Micro Devices analysts anticipating earnings of 56 cents on revenues of $5.3 billion. I won't show you that chart, but it is another one of those all sessions on the IG platform. Where I want to leave you is just a quick roundup of what's happening in a couple of other markets. No major move in the price of gold this morning. We're up by a margin of 0.07% at 1984. And same sort of thing for oil. Not really much move after yesterday's small drop. We're still within the confines of the trade we've seen at the extremes in the last week, between the low point we had back on Thursday last week at 77.35 and Brent's recent high at 80.49. We're currently trading at 79.08. Not much going on there. Let's look on. That's it. We're back at 10:30 with Charting the Markets. Do watch out for Superdry and BP at the close of the London markets in around about 10 minutes' time. Still looking for gains across the board in Europe. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.